Welcome to the Mortgage Podcast, where we give tactics, strategies, and inspiration to get you to 10 plus loans per month. We talk a lot about how to make a ton of money in mortgage while also being happy and thriving in your personal life. If you want to be a mortgage millionaire, you're in the right place. Welcome everyone back to the Mortgage Podcast. My name is Todd Scrima, and thank you for taking some time. This is Banker or Broker. This is a touchy one, right? So I know probably most of my personal mortgage company is retail, but we do have a wholesale division, so I serve both. I also have been a banker and I've been a broker. So I'm going to talk about both experiences. I'm going to talk about some math. I think it's one of those areas where there's a lot of confusion. And so my main goal is to dispel some myths. And then I've got a kicker at the end for you that I don't think you're going to expect. So when I first got in the business, I worked for a mortgage banking company, and we were retail, but the owner had just opened up brokering. And I don't know the exact date, but brokering just became popular in the late 80s. So when I got in the business in 92, they also did wholesale. And so I saw these people come in and drop packages off all the time. And one day I went up to the receptionist. I'm like, what are all these people coming in and out? They're not delivery people. It says, oh, those are brokers. And I said, what's a broker? And I'm like 2 months in the business. And she says, oh, well, they work either for themselves or for a mortgage brokerage company, and they give us loans so that we can underwrite them and fund them. So that was kind of my first introduction. And the reason I say this is a slippery slope is because I think there's benefits to both. And I'm going to try and articulate those benefits the best I can and give you what I hope you will find is a pretty unbiased look at both. Now, also understand, when I do all this, I have coached loan officers professionally for 24 years. And again, this is part of the bias part. Very few times in my life have I coached a broker that did a lot of business, but that doesn't mean there's not exceptions. And it doesn't mean that every mortgage banker is, closing 10 loans a month. So there's a lot of wishy-washy in here. I hope to give you a good picture of both. So let's start with mortgage bankers. So let's say, whoever you work for a retail mortgage banker, you're a W-2 employee, you have health benefits, you have matching 401k probably, or at least a 401k. You have probably more structured management, probably more access to, say, different software programs that are done for you. And it's probably a little bit more organized. It also may have some more rules. So maybe, this is a silly example, but maybe you want to take your dog to work. Probably not going to be approved at a mortgage banker. Mortgage broker probably doesn't care. That's an example. But I think in general, more structured, that the mortgage bankers that, whether it's my company or other companies, you're going to make like net to you about 100 to 125 basis points. I don't know, maybe 20 years ago, that was more like 150. But, my average loan amount used to be $72,000 and now it's $350,000. So there's been a big increase in loan amounts for everybody over the years. That's more of a banker. A broker, there's all kinds of different examples. Some people work out of their house and they have their own little corporation and it's just them. Maybe they usually, a lot of brokers use outsourced processing, which, I don't think is good or bad. And the economic model, well, let me say this in a story format. So last Friday, there's a friend of mine that I've known for about 10 years and, he's a broker. And he said, Todd, I just want to meet with you. I don't know if I would ever work for you, so I don't want you to misinterpret the meeting, but, I like to hang around smart people. He kind of stroked my ego, and I'd like to come meet you. So I said, yeah, come on in. So, and he's doing some good things. He's a broker. He did $38 million last year, so he's pretty good. I happen to know the owner of his company, and I said, hey, what is your financial structure? And I'm going to go over this with you. And this is where a lot of people go wrong. And so stay with me for a second. I almost brought in a whiteboard to illustrate this, but how he lives in California. So for all the wholesalers, he signed up to receive 225 basis points of comp. 45 basis points goes to his broker. So he never sees it, comes right out of the check. His processing fee is $995. That goes straight to the processor. So he doesn't get any processing revenue, and 45 basis points of the 225 goes to the broker. Okay. Then what he's left with, if he doesn't discount, he's left with 180 basis points. Then he's got to pay out of that his health benefits, his credit reports, if he has rent, which he does, office supplies, computer expenses, matching payroll taxes. In most states, you're matching payroll taxes. It obviously depends on your volume, but it's about 20 basis points. Okay. Maybe office supplies is 10 basis points. Maybe your rent is 20 basis points. Health benefits, maybe your spouse covers your health benefits, or if you have to pay for them, it's going to be usually a couple $1,000s a month. That could be 10 to 40 basis points. And credit reports could be 5 basis points to 15, right? So you've got to pay all those expenses out of 180 basis points. So I currently coach several mortgage brokers. This particular mortgage broker made 90 basis points last year. But, discounting is also out of this. So this is a major point. So as a broker, when you discount, it comes out of your check every time, okay? As a banker, usually it doesn't. I know for my mortgage company, and I found this to be true with other owners, we pay for about 80% of the discounts. Some people call that pricing exceptions. EP is our nickname for it. So, different terms to just say, hey, this client wouldn't do a loan for me unless I gave him 30 basis points. Usually in a banking environment, that's paid for by the corporation, okay? So that's a big difference. When you net it all out, those mortgage brokers are going to make 60 to 90 basis points. I coached a lady last year. She's a broker. She did 180 million, which is a really big producer, and she netted 62 basis points. I don't know, like in a banker environment, it'd be very rare to make less than 100. Like it happens, like maybe someone's in downtown Seattle where they're doing a bunch of jumbo loans and they're paid 80 basis points or 90 basis points. But by and large, the mortgage bankers are going to net quite a bit more money. Not always, but in general, they will. So, that is a different. And where I'm not going with this is I'm not going to tell you it's right or wrong under either scenario. They're just different. When you look at statistically, the private mortgage bankers do a lot more volume than the brokers. I'll give you an example. I have a broker client. They have 1,700 loan officers, and they close 1/10. This is not an exaggeration. 1/10 the amount of loans that my loan officers do. And I pretty much find that's pretty consistent. The best broker that we do business with, they have triple the amount of loan officers as my mortgage company, and we do the same volume. Now, why is that? Well, if you're a mortgage broker and say a lot of them work out of their house, a lot of those people just want to do 1 or 2 loans a year or half a loan a month or something like that, and they really have other jobs. Where in a banking environment, that's usually not allowed. I'm not saying never. I have a friend of mine that has part-time loan officers that's a banker, but it's not common, right? I think those are some of the major differences. I think when people do the math, I would say they do a few things wrong. Number one, they look at the gross instead of the net. It sounds really cool for me to tell my buddy that I make 225 basis points, but in reality, after my broker split, after all my expenses, I'm actually netting 70. It just sounds better to say 225. That happens in banking as well. I'll ask one of my salespeople, hey, how much money do you make per loan? And they'll say 125 basis points, but yet I'll show them a sheet that says, actually it was 115 because there was some discounting in there, or you paid for some marketing or something like that. One of the mistakes is they're looking at the gross instead of the net. And the net is what you get paid on, so that's what counts. I think when you look at the pricing exceptions, that's a big one. So when I'm referencing the last few years in mortgage where things got really hard and the market constricted, and you have what we call price compression, okay, which is a fancy term for loans are just worth less. When you look at all that, the other thing that happened was you had 2 big wholesalers in America that they were literally doing loans for free. And they did that, right, to gain market share so that they could raise rates later. And everyone's like, well, they'll never do that. Well, okay, this last year, those 2 wholesalers, we track it every week, and I can show you this mathematically. They've raised their rates 50 to 70 basis points. But it also gets confusing because those same 2 wholesalers that we track every day, they also have weeks where they drop their price 50 bips and no one else does, where a banker is more consistent, okay, in general. And so that creates confusion in the market. They're like, hey, let me get this straight. We were basically the same price last week, and now this week, this wholesaler's 50 basis points less. That's not rates going down. That's just that wholesaler playing the price game because they know, and there's all kinds of, when you get into secondary marketing and capital markets, There's all kinds of ways to price loans. And one of the techniques that wholesalers do is flash a really good price. It's in my head as an originator. I'm probably going to go there with that loan. I'm going to quote that. And then when I go to submit, rates have increased 30 basis points, 2 days later, but the market hasn't moved. So if you're a broker, this happens, and it's just the way that industry works. And it's never going to really change, because that 30 basis points means that they increased one day, means whether or not they make money. So where mortgage bankers are just more consistent. So you'll see, we call that flashing. Their price is flashing. It's like a beacon or a bat signal, like their price is flashing. That's not right or wrong. That's just part of the nuance of that business. For a mortgage banker, they're not going to flash prices much, but they're going to be more consistent. So when the market does move, it moves up accordingly. If it moves down, they move down accordingly. Where, broker shops, it's depending on who they broker to, it's different. I think the other thing that a lot of people don't realize, again, a little conception issue. When I first became a broker, and I was a broker, from 95 to 99 roughly, or to 2000, is when Summit became the mortgage banker. My impression was I could do business and broker loans all over the place. But after you do that for a while, you're like, oh, yeah, they have a good price, but I'm closing 2 weeks late. Or, oh, they have a good price, but they won't call me back. I can't talk to the underwriter or whatever the issue is. So what ends up happening in reality, and this broker who closed $38 million actually says, Todd, I do business with 3. And that's pretty common, where you not only develop relationships, but you get to know the underwriter, you get to know your CSR, your customer service rep, you get to know your rep, and some of it's relationships, some of it's just you want to trust them. You want to be able to count on them. So it sounds like, oh, I'm going to do business with all these people, but you really don't. 95% of your loans are done with 3 or 4 wholesale lenders, and that's usually what happens. And I don't find that there's really exceptions to that. And so those are some pros and cons, or a little bit of explanation on both. Which is right for you? That's your choice, right? You have to make that up. I think that there's probably more things like coaching and culture, not always, but coaching, culture, stuff like that in a mortgage banker, but some really good brokers have that as well. A lot of it, again, boils down to the company. It also depends on what you want to do. You want to do 1 or 2 loans a month, you're probably better off being a broker. Not because you'll necessarily make more money, but most mortgage bankers are not, that's not their culture. Like, hey, we're going to barely hang on and do 10 loans a year. That's not really what their business plan is. So right or wrong, that's just how it is. Here's the secret sauce that I promised you at the end. Now, leap with me here. It doesn't really matter. What matters is how much volume you do or how many units you do. Whether I make another 10 basis points here or 12 basis points here, it's not going to mean much at the end of the day. But whether I close $6 million in a month or 300,000 is a huge difference. And that's where I think people get it wrong. And so my point is, I would focus more on lead generation and loan apps and things like that than necessarily who I work with. And this gets me in trouble in Summit sometimes because I don't believe in lateral moves. So a lot of times I'll talk to people and, I do quite a few interviews and I'll just like, hey, bud, can I be really honest? Yeah, I would just stay where you're at. I mean, your low volume is not because of your employer. It's not. It's just because you need to sell better. And don't think that you're going to come here and we're going to all of a sudden wave a magic wand and you're going to be closing 6 loans a month. It doesn't work that way. So that's kind of my 15-minute overview on this subject. That comes with, 32 years of experience. There are nuances and it can be more complicated than that, but it's really not. And I've spent my life trying to understand all the details of things. And then when I do things like a podcast or a talk or I'm coaching someone, I can keep it pretty simple and still give them really good advice. And that's really kind of the point of this whole podcast, is to give you a different view on how things work according to me. And it's not like that I've ever been wrong, but I'm usually not, right? Just a lot of experience with a lot of different things. And that's kind of how this plays out. Who you work for is more about who you work with. And what I mean by that is not just friendships or relationship. It's more, hey, do I want to do a lot of volume? Do I really want to make a lot of money? And what's the best place for me, knowing my personality and what I need? Where should I work? And I think that is the reality. The last thing I'll say on this is there is an impression that a lot of people, a lot of loan officers, percentage-wise, went to broker. And I actually thought that as well until I did my own study within Modex. And here's what I found. I found that there was a rush to mortgage brokering like 2 years ago, 2.5 years ago. However, a lot of those people seem to have gotten out of the business because when you look at the growth in volume or the growth in loan officers between brokers and bankers, it's very similar. And so I think there was this impression in the mortgage industry that a lot of people are shifting to brokering. I think what actually happened is those people thought, oh, and again, this is where the logic gets flawed. I'll make another 100 basis points alone being a broker, which is not true. And even though I'm only doing one loan a month, I'll be able to stay in the business. And I think what they found is, hey, after all the expenses and stuff, it may be 10 basis points better or worse being one or the other. It's not really the issue. The issue is, can we do more units and do more volume so that our income can increase? And so what happened is you had people go maybe from a banker to a broker to out of the business. And when I say that, I'm not making fun of people. I've had people that have left the business as a banker. I'm not trying to put a broker down when I say that, but that's been a trend that's for sure happened across America. And so when you look at it all, I think the answer is, whether you're a broker or a banker, let's work on things that get you more units and therefore more volume and therefore more income. So if this helped bring some clarity, please share it with someone. I would really appreciate it. It's how these things grow and spread. And my goal here is to help people get to that 10 loan a month mark, because to me, that's the magic number in our business. Okay. Thank you. Have a beautiful month.